In times of economic uncertainty where everybody is talking about an upcoming recession and stock markets crashing and destruction everywhere, we all want to make the right moves when it comes to our money. And rightly so. But most of us, including me, didn't know what are the safe places to save our hard-earned money apart from our bank accounts. Over the last 11 years, me as a chartered accountant, I have spent in the finance department of 4 of the best MNCs globally. I have realized that there are some high-yielding places and safer assets as compared to cash. So without any further ado, let's talk about them. Alright, so first stop on my list is something shiny and timeless. Gold and all the other precious metals. Remember when Warren Buffett said, gold is a way of going long on fear. Now, gold has been used as a medium of exchange long before fiat currency actually existed. But the most interesting thing is the inverse relation gold has with all the other financial markets, which essentially means that when all the other financial markets go down, gold either remains steady or goes up. So usually in recession times, when the stock markets are coming down, the bank saving rates are being slashed and interest rates are being slashed to control the inflation, and jobless claims are skyrocketing and everything else. But even in these times, gold is the asset which is performing really well in terms of price behavior, which makes it a super attractive asset to hold in place of cash. And not just gold, all the other attractive assets including silver and platinum. And the reason is that people trust the banks and the financial markets lesser in such times. Second on my list is real estate. Now, this might seem like a very obvious option and the most common option most people turn to avoid holding cash at any point of time. The reality is that your cash will lose its value if you keep it in a bank due to inflation. But if you keep it in the form of real estate, it will not lose its value at any point of time. To explain it simply, anything costing you $100 today will cost you higher in future due to inflation. To take an example, if you want to buy something for $100 today, it will probably cost you $110 maybe 1 year from now. And on the other side, if you had kept $100 in bank over the same time, it will remain 100. And thus you will not be able to buy the same thing with your money if you have kept the same money in your bank. Luckily, if you look at real estate, the performance has always been better than inflation in the last 100 years. The only problem with real estate is the high initial investment that it requires. Well, no problem, you can also invest in real estate investment trusts, better known as REITs. These funds are offered by a lot of companies and they offer you the same return had you invested in the full property itself. As Robert G. Allen put it once, don't wait to buy real estate. Buy real estate and then wait. The next asset on my list is very interesting. Industrial raw materials. The fact is that even in times of recession, these materials will remain in high demand because the factories will keep on running and keep on producing the necessities for your consumption. So materials such as lead, copper and silver, even coal always remain in high demand. But you might be thinking that you need a large storage space to keep any of these assets, and most of these assets will have a shelf life. Well, not exactly. You do not actually need to own these assets yourself. You can invest in those companies, the high value stocks, which deal in these assets. And most of them are available on the stock exchange. Over short term and long term, these high value stocks will always perform better and keep your money intact. Which brings us to the next asset, dividend stocks. Now, we have always heard that wise people do invest some portion of their wealth in stock market, but the wealthy people invest them smartly. First, they always invest for the long term, and secondly, they will only invest in the stock of those companies which they think will perform better in terms of profit in the long run, and thus yield higher dividends over time. In this way, they don't only benefit from the capital appreciation in the stock price, but also benefit from the dividends that they get. Now, treat that dividend as your salary or your profits, and you can only spend that while keeping the stock intact and let it grow in the longer term. And last asset on our list is the most interesting one and probably the most underrated one, the rare art and collectibles. But the problem with this asset class is you need to have a very special eye to look for such valuable stuff. Now, it might be some rare limited edition cars or those collectible watches or some very rare art pieces. The only problem is that it is very hard to put a price tag on any of such asset, and thus it remains a niche not commonly known to a lot of people. Just to give you an idea, on May 5th, 2022, in a secret auction at a Brands Museum in Germany, Mercedes-Benz sold one of the 1955 300 SLR Alhot coupes from its extensive collection of historical automobiles, which dates back to the earliest days of the car in the late 19th century. Now, the sale to a private buyer was for 135 million euros. Not just cars, some art pieces and valuable paintings have still to date remained the most priciest auctions ever held across the world. And this makes this asset class unaffected by the turbulent times or even recession. Remember that every investment is a journey, so I advise you to do your own research or even talk to a financial guru at first before investing in any of things that I've talked about. If you liked my content, please consider liking the video and subscribe to our channel so we can bring you more content in the coming future. Till our next video, have a safe day everyone.